All right, you guys, we're going to go over the big loss I took on Friday on crude oil. It was a good trade in the moment, but I ended up taking about a $690 loss on that trade. And I want to cover it because I don't see a lot of people covering losses out there on YouTube. And losses are a part of trading. And it's important to realize that you don't win every single day. And I'm also going to do a special video on some of these channels that are posting videos where they're making, $30,000 in a day across 6 or 7 of these, so-called challenge accounts. And I want to talk about the dangers of promoting that kind of trading activity. So stay tuned for that video. It'll be coming up next. But quickly, just to go over my biggest loss of the week, which was crude oil. Again, one contract, about 69 cents there for $690 loss. You can see the hourly chart here. This was on Friday. And even though the hourly was trending down here, I was just waiting for what I believe to be a strong support level, which I had here at the time at about 73.50. And you can see that the hourly sucked up off the lows. This is the hourly chart. And we were at a low volume distribution area. So I was looking for rejection. Now, we were inside the value area high. And I'm going to point something out about taking these trades when you're coming from outside the value area high back inside the value area high. A couple great examples from Friday. So we'll get to that in just a moment. Here with this loss on crude, it was a good trade. I don't regret it. The one thing I do regret a little bit, and it's just something that I'm going to have to continue to learn from and be a little bit more patient. Sometimes I too make mistakes, and this was my first full-time live stream week. So I think I jumped the gun a little bit on this trade, and that happens from time to time, whether you're live streaming or not. Usually I'll wait for, if I'm trading the hourlies, I'll wait for the hourly close. And if I'm trading the 15-minute chart, I'll wait for the 15-minute close, just because it kind of keeps you anchored into making good decisions based off the Owings market analysis, patterns, types of trading, all these things. It's much easier to trade when the bar is closed, because then you have a fixed point at which you can make your decision. So here's the 15-minute chart to the right. This is that exact moment in time. So what happened is, as I saw the hourly reacting to this support level that I'd been waiting for, I looked over at the 15-minute here. I could see the 15-minute was trying to push higher. Now, in this exact moment, remember, we're trading the hard right edge. We don't know any of this is going to happen, right? It's super easy when you look back at it and go, oh, of course, this is trending down. Why would you ever buy here? Well, in the moment that I bought, I saw a ton of support here on the volume profile and some of my other charts. And I also saw the 15-minute at this exact moment was up here. It was pushing up with just a couple of minutes to go before the close. And I thought, you know what? This thing is more than likely going to close up in here around 73.90. And I like this trade so much because of the war in the Middle East. We've got a great support pattern. Bonds were steadily going up at this point throughout the day, so rates were coming down. The euro was getting strong against the dollar. Gold was rallying. Everything looked good for this trade. So that's why I don't regret taking it. And that is actually probably why I jumped the gun and got in a couple minutes too early before this 15-minute close. And when I got in here at about 73.83, I believe the exact price was. I don't have my DOM open right now, but it was about 73.83. And then we closed down in here. I was a little less confident in this trade, but decided to hold on to it just to kind of see how we'd react to this support level. And sure enough, we pounded straight through it. And that's where I took my loss there for 69 cents on crude, $690. And I just want to point this out because this is what happens when you trade. You will take losses and you've just got to move on to the next trade. Of course, try and learn from the trades that you're taking, see where your winners are coming, where your losers are coming. And with that in mind, I want to point something out to you, as I promised in the beginning of this video, regarding the value area high, because on another trade I took on Friday, which ultimately ended up being about break even, my gold trade here, this was also kind of a similar setup to crude. At this time, I still thought we were going to rally. And what you could see here on the hourly chart, we were just firing to the upside here on gold. We pulled back here on the hourly. I thought, again, with everything I'm seeing across the broader markets, it looked like gold had a good chance to continue rallying at least back up to these highs is what I was thinking. So again, we don't have this information ahead of time, right? We're trading the hard right edge. This pullback here, I liked it for a variety of reasons. I said, okay, I'm going to look to go long. So when I saw the 15-minute chart here showing me some support at this hourly area where I wanted to get long, and I thought, you know what, I'll go ahead and put on a couple of contracts of gold here. So I bought 2 contracts of gold right in this area, and made a good decision on this trade, because as we pushed higher here, I could see that if this trade was valid, this 15-minute bar should have really pushed further up into this resistance zone. The fact that it could only get to about 2060 was disconcerting to me. So I took those 2 contracts off and I booked, I don't know, about $500 in profit on that trade, $550 maybe. So at that point I was only down, $100 on the day or something like that, $200 maybe, can't remember. So that was a good call. But then when we came back down to the support level, I thought, you know what? I'm going to buy one more contract down here because there's still a lot of support here. So I bought a contract here, and then as soon as I could see gold, breaking down here, I decided to cut it. And that's ultimately what ended up giving back those first profits I made there on that push up. I lost them back here and ended up finishing down about 690 on the day from that crude oil trade. So these are my 2 trades from Friday, and I think they were good trades overall. Looking back at them, there's nothing I would have done differently, and that's just the way it goes sometimes. You got to take 20 trades out of your edge, and if you make good money on 10 of them and lose on 10 of them, that's fine. That's how trading works, right? So the last thing I'm going to leave you guys with, what I promised, the value area high. This is something that was really important. If you've been paying attention here, you notice from my gold trade, what happened here? We were sneaking back inside the value area high. Now, I was counting on the point of control potentially shifting higher, and thus the value area low potentially shifting higher. That's why I was willing to buy in here, but that never ended up happening. And this is going to alert me to, potential dangers in future trades. If I'm looking at the hourly, especially in this case, I'm looking at buying the hourly here, but the high of the hourly is coming inside the daily value area high. That might be a warning signal. So that's something for you guys to look out for as well. And if we look at crude, we can see the same exact situation here on crude. Right there, the trade that I wanted to go long on crude, you can see that we were sneaking back inside the daily value area high. I had a lot of reasons to take this trade. Again, I thought that maybe we'd start shifting value up. So that's why I took it, because the volume profile is active. It is moving throughout the day. And you've got to sometimes anticipate where it's going. But in this case, my one loss and my break even from Friday, gold ultimately was a break even because I made money on that first pop and then gave it back on the drop. But my break even and my loss on Friday, both of them were on hourly bars coming back in from the value area high. And when that value area wasn't shifting, at the end of the trade, when I can see, okay, what are some commonalities here between these 2 trades that didn't end up working, I can see a big one jumping out, which is this issue of the hourly high at the value area high, and then we're closing down here in the middle. So that's something I'm going to write down and be aware of moving forward, and I want to share that with you guys because I think it'll help. So I hope this video brings some value to you and just shows you that when you trade, you're going to take losses and you just got to move on. For me, it was a good week. Only took I took about 3 trades, actually. Very quiet week, so I was very patient, happy with that. Had 2 break evens and 1 loss, and ended up the week down about 690. So for me, that's a very manageable week. That happens from time to time, and you just got to move on to the next week. And I'll just leave you with the issue that I was seeing in terms of this last week. You can see if I bring up the monthly, weekly, daily charts. Let's just go ahead and quickly switch on over to the NASDAQ. You can just see here on the weekly chart, these are the weeks where you want to make hay while the sun is shining. These types of trend runs to the upside, you're going to get tons of good opportunities on the hourly intraday charts when you've got very clear higher time period structure where the weekly is clearly heading in one direction, or even if you're in congestion, if you've got a clean congestion zone, you can make a lot of money on that as well. So, 90% of the time there are pretty favorable trading conditions, and the time period that I like to really exercise caution and watch out for is when you have these radical trend reversal moves, especially on the weekly, because for me as a day trader, the weekly is one of the most important charts. So I knew coming into last week that, you know, I was counting on starting the week. I was looking for some volatility to the downside, and I was excited to play that if we got off to the races. But as soon as we started to, you know, reverse back up above some key levels, especially with that big move that we had up on Monday, that short squeeze day to the upside, that's what made me cautious the whole week, because I thought, okay, this is probably going to be one of these weeks where, you know, we fired down here and now we're going to fire straight back up. These are very, very difficult when you're day trading. So you just got to be careful when you see this type of price action on the weekly. So keep that in mind. Next week, I think it's going to be a fantastic week. I'm super excited. We're going to continue to live stream on the channel, and I'll see you guys at 7:30 a.m. on Tuesday morning, because Monday is Martin Luther King Day. So it's a holiday. I believe some of the markets are open, but the liquidity will be very thin, and I'm not going to trade them. And I recommend you take the day off and relax and prepare and get your energy ready for Tuesday. All right, so that's the recap of last week. I hope you've enjoyed this video. I'm going to do some extra videos today on volume profile. I know a lot of people are interested in volume profiles. I'm happy to continue to cover that. And do shoot me any comments, questions in the comment section below the video. Like, share, subscribe, all that good stuff. All right, you guys take care. Have a good weekend, and I will be back.